support price policy. It has been critiqued in the last year or two as being fairly rigid in
Hello and welcome to Bloomberg Quint Live, India's first live streaming business news channel. I'm Darshan Mehta. On to the top story right now. Let's first head across to Vishwanath Nair, who joins us with the big details. Vishwanath, the entire merger has been announced. Capital First will be amalgamated into IDFC Bank. It's a large conglomerate that they're looking to build into. Give us more details. What exactly does this mean?
What the announcement says is that it's a kind of a merger wherein for every 10 shares of Capital First, the shareholders will be getting about 139 shares of IDFC Bank. Now, what this essentially means is that IDFC will have to bring in all the retail businesses of Capital First so that it can have a more balanced sort of loan book. At this point in time, IDFC Bank is heavily tilted towards the infrastructure lending side. So because of the Capital First, large retail business and SME business, that sort of gets balanced out and that sort of helps the bank become more compliant to the RBI norms. Otherwise, it had a sort of concentration risk on its book. Now, this follows an important sort of merger failure that happened just a few months back, between IDFC Bank and Shriram Group. They had tried to merge the two banks, but then that sort of merge the two companies, but that sort of fell through because of the talks having failed. So it's important then for IDFC Bank to have closed this deal and finally have a sort of retail business on its book.
Okay, hold on, Vishwanath. Hemendra Hazari tracks the sector very, very closely. Good morning, Hemendra. What do you make of the merger? The swap ratio is 139 shares of IDFC Bank for 10 shares on Capital First, which means that Capital First, the valuation is trading at a premium or at a discount of 12% on the entity. What do you make of this entire deal? Who benefits? Does an IDFC Bank shareholder or a Capital First shareholder? Okay, Hemendra, can you hear me? Okay, we have Samir Kalra here, who's joining us from Target Investing. Samir, what do you make of the entire deal, the valuation, and who benefits here?
So I think Capital First is benefiting out here, the shareholders. Okay. Because it's right now as of Monday morning, it'll be 12% discount to the amalgamated firm. Okay. So I think the IDFC Bank shareholders have the only positive over there, that the bank now improves on the total loan growth and the loan book kind of a division. Because as I can see the numbers, the NPAs come down of the merged entity to around, gross NPAs come down to 2.2% as a 4% for IDFC Bank. So fundamentally on the number side, I think IDFC Bank shareholders benefit, but on the kind of a valuation side, Capital First is the shareholders are the more beneficial out there.
Vishwanath, I'll come back to you. What you've been speaking to, because this news has been out for a while among media circles. What are people and analysts saying in terms of this merger? Is it a beneficial one? Because the last time IDFC Bank tried something like this, it actually didn't work out. So, what are the pros and cons of this merger?
It's definitely smaller than what the deal would have looked like with Shriram Group, because that people at that time had said that it was going to create a massive financial conglomerate, and that was about 65,000 crores, one of the largest retail businesses in the country. So obviously this is not of that scale or size, but it's of course interesting to see that IDFC has finally been able to close a deal with a retail player, with a pretty active retail player. If you look at Capital First books, it's at about 23,000 crores, the lending book. So, that's quite massive. And what the analysts and experts seem to be saying is that this is obviously good for IDFC Bank as well as Capital First, that they have they built this sort of a relationship, and this will go forward to create a better company.
Okay, hold on, Vishwanath. Ashutosh Mishra, he's a research analyst at Reliance Securities. He joins us on the phone line. Good morning, Ashutosh. Your first comments on this entire merger that has happened?
It's a good feed for both the companies. If you look from the IDFC point of view, the major drawback which IDFC has is basically a retail franchise and retail business. Okay, so the Capital First will bring that into the IDFC fold, and that is much required at the IDFC Bank level at this point of time. For if you look from the Capital First, definitely this will give them a scale and much better liability franchise as well as capital efficient model. So overall, what we clearly see that this can go ahead, and even on the regulatory front, like the earlier merger, it was not able to pass through because of the both regulatory as well as valuation. Probably this merger may go through because of size as well as it is quite fit with each other on synergy front.
Okay, so the merger ratio is 139 IDFC Bank shares compared to 10 of Capital First. On Monday morning, which one would benefit, the shareholder of IDFC Bank or a Capital First?
Hello.
Yeah, can you hear me, Ashutosh? Ashutosh, can you hear me?
Yeah, I can hear you.
So my question is that the merger ratio is 139 shares of IDFC Bank. If you have 10 shares of IDFC Bank, so that's the merger ratio. Who benefits more, with the shareholder of which entity will benefit more? Can you hear me, Ashutosh?
Yes, I can hear you.
Yeah, so who benefits more now?
See, if you, from the merger ratio perspective, if you like, definitely there will be some spike in Capital First shares, but eventually it will be more, look forward towards the IDFC banks. If you look for the medium to term perspective, means 3 to 6 month perspective, then probably it will be more beneficial for the IDFC bank shares. But in the short term, definitely Capital First will be slightly higher because of this whole thing.
And my final question, Ashutosh, is what are you recommending your clients to do now since this merger has happened? What would be your process next? What can someone look forward to?
We don't have active coverage, so we are not recommending anything on the stock. But definitely, we see this as a positive development for both the companies. But if anyone wants to trade at this point of time, probably there can be some activity for the next week or two, but thereafter people will work towards settling the things like what is happening in the case of IndusInd and Bharat Financials. So when the merger will announce, you will find the prices move, but post for 6 or 8 months stock prices we expect to remain in the same range, especially for IDFC Bank because that is the acquirer company here.
Okay, Manish, thanks for that. Ashutosh, we'll let you go on that. Ira Dugal joins us on the phone line. Ira, the news is finally out. The merger ratio that they have put is at 139 shares of IDFC Bank compared to 10. So that means that Capital First is trading at a discount of 12%. So that catch-up can probably happen. But my main question is, in the whole scheme of event, how does this merger fit into for shareholders of both the companies?
Sudarshan, I'll let the research team do the shareholder analysis. I'm just going to look at the more fundamentals of the business. I think, for IDFC Bank, this is a game changer. We all know, and we've spoken at length about the fact that IDFC Bank, which was the two new age private sector banks that got the license in the last round, has not really been able to sort of pin down its strategy. It started off saying that we want to have a large Bharat banking segment. They did one small MFI acquisition to achieve that goal. And then they wanted to build a retail franchise which is based in urban and semi-urban areas. They haven't had much success with that. They, as we all know, tried the Shriram deal that fell through. What they seem to want really badly, and this Rajiv Lal said at the press conference where the Shriram deal was announced, is that he feels the sequencing of growth has to happen by first acquiring retail assets and then building retail liabilities to go with those assets. Now, it could be argued that you first need to build retail liabilities, but Rajiv Lal doesn't agree with that. So he's been out there looking for assets. So if you want to buy a big, chunky retail asset, Capital First was probably one of the best available options. So, they've done good in terms of this time around, at least finding the right target. Capital First will bring with it a significant SME book. It will bring a significant retail book. And it will bring a leadership. And here I'm talking about V. Vaidyanathan, who I believe will be the CEO of IDFC Bank post this merger. He's a guy who knows retail banking. The IDFC DNA is corporate banking, it's infrastructure banking. They will now get a team which knows retail banking. So they get a retail portfolio, they get a team which knows how to build retail banking. The big question mark remains, how will they bring retail liability? IDFC Bank, despite trying quite hard, has I think only about 5 to 7% in terms of CASA as its overall pool. Capital First doesn't bring any deposits with it either. So the question is, how will the two come together and build that deposit base? I'm sure we'll ask that question to Mr. Vaidyanathan. He's done it at ICICI. He knows how the business works. So he'll probably have a strategy in place. Just a quick word from Capital First's perspective. It is not clear to me how much Capital First gains immediately. Of course, it is basically the banking license which they gain. They will now be a bank, and Mr. Vaidyanathan will be the CEO of a bank. So they can do all businesses and they can grow the bank from here on. But he doesn't immediately get access to low-cost deposits because IDFC doesn't have those low-cost deposits. So I think IDFC is benefiting far more than Capital First is. There's no question, and I'm talking fundamentally, not shareholder-wise. And from here on, they will fight the game along with the Kotaks and the Yes banks, the RBL banks, the IndusInd banks, and essentially try and be, another Me Too lender. There'll be no great differentiator, at least not on the face of it. Maybe they build one over time.
Ira, just hold on. We have Deven Choksi of KR Choksi Securities joining us. Deven, you've heard the news. It's official now. The merger ratio at 139:10. Basically, what I want your view is who benefits now as a shareholder also and fundamentally also. So on Monday morning, the discount is 12%. So what should one, if you are a holder of shares of IDFC Bank, what should you do? If you are a holder of shares of Capital First, what should you do? And what is the future ahead for the combined entity?
All right. So it's a win-win actually, if you ask me.
Okay.
On one side, the Capital First basically I think is a retail SME franchisee in the NBFC space. Is now getting an opportunity to tap the fund at a source level, which is I think at a lower cost fund. So certainly your NIM is basically going to get protected on a higher side. So that is first part of it. On the other side, the IDFC stands to benefit as well because I think they don't have the retail SME portfolio, which would probably I think add the balance to the entire portfolio, and that could lead to the valuation improvement for IDFC, which otherwise I think would have been difficult for them because I think they've been carrying the valuation of the wholesale bank. The advantage of the merged entity would be leveraging the management bandwidth. Clearly, as I see it, I think the management bandwidth leveraging is something which will probably benefit IDFC, the merged entity, the most. And most importantly, I think we are having a situation wherein the country is progressing fast in the area of infrastructure build-up. And that's where I think this merged entity would possibly play a larger role. So all in all, how they plan out their strategy, I think we'll have to wait for that. But it appears to be that it's a win-win kind of a combination that we are looking at.
Okay, Deven, the other factor is now how is IDFC Bank placed post the merger compared, in the banking space where there is significant amount of competition. How will that scenario play out?
So as I was making a point, largely one will have to look at as to the merged entity, both the portfolios, retail as well as wholesale, and particularly wholesale largely catering to the infrastructure space where the size of the balance sheet permits it. I think we'll have to look at the strategy which is coming up on the merge side. I think for a long period of time, IDFC has been struggling to find its foothold in a direction. With this merger, I believe that I think that would probably be taken care of. And should Mr. Vaidyanathan take over as the CEO, then probably he would have a larger confidence because he would be the right person. He has carried the requisite experience.
So Deven, just wanted to highlight that post the entire amalgamation that will happen, it will be, Mr. Vaidyanathan who will be heading the entire merged entity. So a view on that?
Yes, it's a great news, frankly. I think as I was making the point here that he's carrying the requisite experience from the ICICI Bank days and carried on this experience in building the retail franchisee in form of Capital First. So it's a combination of both worlds that he's been carrying along with him. And that's where I think one could possibly argue for better times going forward for IDFC and the shareholders.
Okay, many thanks for that. We have Ira and Shraddha of Bloomberg Quint. Both of them are still on the line. Ira, anything that you made of what Mr. Choksi was saying? Anything that you would want to highlight?
No, Darshan, I think he's absolutely right. Mr. Vaidyanathan coming in and taking over the CEO post is the best way forward. I'm glad Dr. Rajiv Lal has moved into a chairman role. He can certainly direct the bank from here on. I just want to make one quick point. That is the point at which this merger is happening, the stage, the timing. We've seen a retail cycle, and Capital First has benefited from that retail cycle, which is why they've managed to build a strong book. From here on, it is expected that the retail cycle will probably not grow as rapidly because there are some small concerns starting to emerge on credit quality, etc. But we are at the cusp of perhaps at least another modest uptick in the industrial credit cycle. So IDFC Bank plus Capital First coming together will now put them in a good place to first capture that whatever modest uptick that comes in the industrial cycle. And of course, alongside as the retail cycle continues to grow, the Capital First machinery will be able to capitalize on that. Aggregated, and once all the NPA concerns on the industrial book, etc., are taken care of, aggregated now the book looks solid. You have infrastructure, you have large corporate, which comes from IDFC, you have SME, which comes from Capital First, you have retail, which comes from Capital First, and you have a very strong technology-driven platform which Capital First has built. So I think they are now formidable, if not in size, but in terms of the bandwidth that they have, both managerial and, the talent in there and the businesses that they have individually built. So, while we criticized IDFC a lot when the Shriram deal was happened, I think this time around, this is, an appropriate chart to follow. So I'll let you guys carry on with the analysis from here on. But, the deal is done. There's no ambiguity. That's good news as well.
Okay, Ira, we'll let you go on that. Shraddha Babla joins us on the phone line. Shraddha, you've heard all the news on a shareholder perspective and valuation. What do you make of the deal?
That's now tend to agree with what is being said, that clearly IDFC Bank probably stands to gain a lot more at this point in time. And I don't want to repeat what everybody said, but clearly, yes, it will. The customer base now for IDFC Bank will actually triple from the current 2 million. Adding Capital First 4 million, it will actually triple to 6 million now. They had this strategy when they launched to become a mass retail bank. So Capital First, acquiring Capital First definitely fits absolutely into that category. And like Ira said, analysts definitely are seeing Capital First as a better fit for IDFC Bank than Shriram. Plus, just to highlight that Capital First brings in a very profitable model. If you look at their AUM growth, capital net profit growth, it has grown in excess of about 27 and 40% respectively over the last 4 or 5 years. Even if you talk about the NPAs for Capital First, they've remained within the 1 to 1.5% band in the last 4 or 5 years or so. So I think, but we need more clarity with respect to what the rationale for Capital First was with respect to this merger. One, of course, it fits into a strategy of wanting to convert into a universal bank. But one thing that we need to note is that Capital First does not really have retail liabilities. So while this merger will bring in very retail assets, Capital First and IDFC Bank, the merged entity, will have to put in efforts and put in a strategy in place to build the retail liability base, because IDFC Bank also hasn't had too much success so far, given that the CASA ratio is at about 8%. That's probably the lowest in the Indian banking industry. So that's one thing. Again, for Capital First, immediately does not really lower its cost of funds, because again, IDFC Bank's retail or retail deposit base is not significant. Secondly, a lot will also depend on the structure of the merged entity. I'm not too sure if they have detailed about that, but just to understand the structure of the entity, that's another thing that we need to focus on. RBI's restrictions on shareholding in private banks will also have a role to play in this, but it doesn't seem like a hurdle at this point in time based on what information we have. So I think clearly everybody has spoken about the valuation discount. So I think going forward on Monday, now the focus, since the deal has already come through, will now move to what will be the strategy of the merged entity to actually compete in this entire competitive banking space. I think that's where the focus will move.
Okay, Shraddha, thanks so much for the analysis. We'll let you go on that. Sameer, now you've got a chance to go through the entire deal, what exactly has happened. Let's simply put it out. If you are a shareholder of Capital First, what should you do on Monday?
So I think you should hold on to.
Because you have that 12% advantage.
Yes, that's one of the point. But you know, as your analysts and everyone is optimistic that the whole deal is about more positive for IDFC Bank. So as an investor, I always look at a cheaper valuation, right? In a certain sense, if I'm getting today 12% discount through Capital First, I rather own it because eventually these shares will get merged in IDFC Bank.
Okay.
So I have the exposure of having IDFC Bank not directly and paying 12% premium to the deal. I rather buy Capital First.
So Capital First, if you are buying it, that premium will narrow over a while. So you have that chance. Secondly, now if you are an IDFC Bank shareholder, what should you do?
So if you had some kind of optimism for IDFC Bank and that's why you were shareholder till date, I think you should still keep it up and maybe, you know, switch it up. As in you can switch it up as in because Capital First will eventually become a IDFC Bank. You can sell off your IDFC Bank and buy Capital First. Again over there that extra 12%. Maybe on Monday that remains a 5 to 7% kind of a premium. But the only point is if I'm getting 12% cheaper stock of the same company eventually and that eventually as a whole company will benefit out of it, I don't see any other reason than not to buy Capital First and have the exposure to IDFC Bank.
My third question is, does a shareholder of IDFC get anything out of it?
So he'll only get the exposure to a better quality bank. No, he doesn't get anything out of the whole system. He only gets, but eventually what will happen, the IDFC Bank shareholding will dilute because shares have to be issued to the share capital holder. So somewhere that also holding might dilute to a certain extent. So IDFC Limited might have a negative impact on us because of the dilution.
And my final question is, once this entire scenario is done, how does IDFC Bank Capital First merge play in the scenario of, you know, public sector banks, private sector banks, in terms of valuation? Will it be expensive? Will it be cheap? Would you recommend shifting out of it and moving into a different bank, or would this be a bank that could potentially grow into something like?
If I see Capital First and IDFC Bank merged, then it will be one of the cheapest bank right now available on the market. So I don't see any reason to, you know, switch it to another bank. I'm just saying that if you switch it to Capital First, you get a cheaper valuation even within itself. So I think now they'll have more of a better management in the terms of who knows this industry since long and knows how to grow, because Capital First has been growing the book on 10% quarter on quarter for so many quarters. So I think this will benefit IDFC Bank and it will happen that eventually there will be a re-rating to the stock.
So that's the view that Sameer is indicating. So no matter if you are a shareholder of Capital First or IDFC Bank, you should hold on, because valuation wise both of them will play up for you on Monday and even going ahead. Vishwanath is here with us again. Vishwanath, you've heard the entire conversation of what exactly is happening. What's the final word that you're having? Is there anything more that you would want to add on this entire conversation?
Well, just to close this off, you know, there's this retail business, massive retail business that is coming in for IDFC Bank. So how they're able to manage all of that, how their staff is able to manage all of that will be important. What will also, you know, take this thing a very important role in the whole thing will be the overcrowded retail lending market. The banks have already been struggling with trying to find sort of a balance between their corporate lending and retail lending. Corporate lending has not been growing, so they've been pushing retail lending quite a bit. They've all really been out there lending to home loans, auto loans, all of these retail products. So, you know, as a new entrant or as a comparatively smaller entrant, how they're able to grow their book, how they're able to maintain that kind of asset quality without getting into any of the you know, fast growing problems, that will be sort of important for IDFC Bank, and that will sort of determine how this bank is going to look like, you know, in 5 years or so.
Okay, many thanks for that, Vishwanath. Thanks, Sameer, for joining us on the studio. With that, it's a wrap on the coverage of the big merger between IDFC Bank and Capital First. Stay tuned to Bloomberg Quint. Thanks for watching.